Happy Saturday and welcome to another weekly market analysis. It's April 1st, April's Fool's Day, but there's not going to be any fooling today. It's all about the markets, the first day of April, and start off again, then the continuation of our market ventures, really. So as always, we look at what's coming up, what happened last week with the economy. Obviously, we dive into markets, emerging markets, quite a few lessons of the week, and then a couple ideas for the trade of the week. So basically, this is what I'm gonna focus on. These are themes that I'd like you to pay attention as they will come. Is our 7 things that it's important for upcoming days, weeks, and months. So number one, for upcoming week, just remember we have the non-farm payroll, and believe it or not, it's on Friday, which is the Good Friday. This is our Good Friday, and on Good Friday, you know, the markets are closed, but the futures are open till 10 a.m. So while the cash market is closed, the whole Europe is closed. Canada is closed for Good Friday, including actually even Monday. But anyway, so we will have the non-farm payroll. The earnings will come out as scheduled on Friday, although again the cash market is closed. So if you're doing your NFP trade, you still can do it partially. Again, the market's that volume will not be that high. So second thing we discussed about risk appetite, what is happening with the sector rotations. Is this move, we had one of the best weeks last week, is it a short squeeze? And we'll discuss that. And of course, seasonality comes into picture. About a month ago, over a month ago, actually, we talked about seasonality. Let's see if it's playing any role in this. Also, I want you to pay attention to Japan, the Japan's central bank, the change of guards, the Kuroda central banker, you know, as you know, it's his regime, it's end of that regime. We will see if this is the whole new regime, what are the ideas. The other thing is, you know, we see how the markets have been strong, especially the NASDAQ. And is this back to mega caps? And I'll just spill the beans right now. It was said on Thursday, I was looking at some of the statistics. I think about 90% of the S&P's return is based on Apple, Nvidia, Tesla, Microsoft, and Meta. So you remember that you said those FANG stocks, they are representing the whole, really all the gains in S&P and NASDAQ 100. So is that good or bad, or do we concentrate on these, just ride ride with it? And the last but not least, you know, in our charts, we're gonna look at quite a bit about Fibonacci, the squeeze, see if that plays any role. So with that in mind, let's start with the economy. And it's important, there's 2 themes this coming week. I would recommend really emphasizing this initial jobless claims. As you can see, the continuing jobless claims still below where it was in 2019. So there was a little increase in that. I mentioned to you last week about the individual states. The question is this question of recession, but recession without really hurt employment, that's not going to stop, you know, as far as the Fed's attitude toward the inflation. So, but also whether we will have a recession horizon. So we want to pay attention to the employment. So one of the ways we will pay attention again on Thursdays, it's the initial jobless claim. So we want to look at that, and again, state by state. So this coming week, as you can see, again, Good Friday, we have the bank holidays in Great Britain, Canada, and Europe. But again, we want to pay attention, the unemployment, non-farm payroll, it's crucial as far as dictating whether the Fed is gonna pause. There's a lot of talk about maybe even during summertime, beginning or end, even have a rate cut. But if you have a strong employment, Fed could stay hawkish. So that's what it's important to see this April's basically April's numbers. As far as last week, I think the big number, we had the GDP came a little softer. There was adjustment to the January numbers, but it was 2.6. And the personal consumption expenditure, that's what the Fed looks at as those inflation numbers, came a little better than expected, so it was lower. And the core, which excludes food and energy, that was also better. It's one number, so we don't want to emphasize too much on that, but that was something that gave more fuel for the markets to be more optimistic about the Fed's action, which will come in the first week of May. The consumer sentiment last week came a little lower than what it was, but still it's above 50. So as always, we want to look at the spreads, and we see again the 2 years was a little higher than what we had last week, and then the 10-year. So the spread is still there. We are still in an inverted yield curve, and that's something we want to watch again. It just has been continuing for quite a few months. So let's look at the markets. Let's start the sentiment. It's interesting that the sentiment hasn't really moved. March was a pretty strong month, and we've had strong weeks, and you can see that the bullishness and bearishness, that spread between them still is a pretty wide range. Rather than being positive 6.5, we are in negative like 32, 33.1. So it's been ranging in that, I'm sorry, negative 23.1. So it's been the 20s, and even we hit the this time close to 30. So still from the AAII sentiment is negative. The CNN fear and greed, the barometer has moved a little higher to the neutral zone. Last week we were right on the borderline of fear, so that's neutral. And the same thing for the Citigroup market sentiment. We moved tiny bit, but we're still in a panic, or it's a little skepticism in the as far as the Citigroup goes. But it was a strong week, and as you know, one of the things that we look at and we talk about seasonality, it was end of the month, end of the quarter. So would there be an element of window dressing when you have all the indices nicely up over 3%? I mean, NASDAQ has been on fire. NASDAQ is up, I think, about 21% since its lows. So basically, would that dictate the bull market? This year, this is from December, up 21, but this year, just from January 5th low, is up almost 19%, and with them at the high in March, which was Friday. S&P is up 6.58, while the Dow has been the weakest, still up from its lows at 4.57. But again, you see all the indices nicely up 3%. And the same thing with the total stock market, they were up 3.67. We were all over. And the interesting thing is, finally, the small caps are catching up. They caught on fire. They've been really almost in the bear market, and they finally had a nice move there, which could be related again, a little calmness about the banking, and especially we've talked about how they represent a large segment of the regional banks in their index. So they were up, the growth again over performed the value. So that's something that you want to pay attention to. So let's jump in. There's few charts I'd like you to walk with me as far as what's going on. And I think it was last week I mentioned to you about the squeeze. We were on a daily squeeze on S&P. A couple of weeks ago, I had a presentation with a group of teenagers, and I talked to them about the power of mathematics, why we use statistics, probability, and when they have to pay attention, because again, we've talked about a lot of students at schools, high school, college, they say it's a waste of time. But the example I gave was right here. I'd be talking about 2 standard deviation ever from the linear regression line. And this was giving us, again, the combining of the momentum change was telling us we don't want to short number one, but this might be a good balance, and we will have some resistance at the moving average, and also our mean linear regression line. And then we talked about the squeeze, and after 2 days of squeeze, you can see the squeeze was fired to the upside. We broke above this, so that should have given you comfort to be on a long side. But now what is happening is we are right on the second standard deviation of the linear regression channel. That doesn't mean by itself you should short. We've got to look at, so we don't short these, but that means if you have some longs, and we will go more in detail about where we stand from the markets, but it just gives you a little pause that maybe you should not be as aggressive. Although we only have had, there's been, it's funny, we just talked about the squeeze, and on Monday it fired, the A wave moved to the positive. So usually goes to about 8 bars. So basically, maybe we can come inside, and then maybe the channel's slope can change. But that's one thing I want to pay attention. The second thing is look at the weekly now. On a weekly basis, we've been in squeeze for the past 5 weeks. The momentum changed this week, and the color changed. So the A wave and C wave are all positive. And then you can see this was nicely removed to positive after bouncing around the midline. So the line, regression line. And now again, is this somewhere we are looking at some type of a resistance, or we have to respect this momentum? Is it going to fire to the long side? So that's another thing you want to keep in mind. Next thing is we want to look at, as always, look at the Fibonacci from the high of January to the low of October. Last week, we were talking about in an ambush zone. We were thinking, look, the moving averages are consolidating. The volume was pretty low compared to actually, the volume was good. It was the week before that, but we were looking at that we are in a kind of a no man's zone. We don't know. I was neutral. We didn't know which way it will go. As you can see, we actually broke above the 61.8. And generally what happens from 61.8, we do go to the 76.8, and that's or 78.6. I mean, that's right around the 4,200, which is really a resistance line. So 4,206, 4,200. So keep that in mind. We're at 41.37 on the futures. So there is a little bit of room left, but keep these targets in place. As you can see, the next, if we break above that, then easily we can move to the 4,300 area, 4,375. So just a second. So I hope that's helpful because we use the Fibonacci. Now, when it comes to our Bollinger Bands, so you can see there's this indication that we are in a good position. We got the support, but we're getting a little overheated. So we are overbought from stochastics. We're at 97. We are outside the Bollinger Band. So that tells us maybe we should cool down a little bit. And this is the S&P cash. So you see that even from the CCI point of view, we are getting a little heated. But when I look at the weekly, you see that on a again 4205 is on S&P cash weekly. That's our 100-week moving average. So pay attention to that. So that tells us that we still got room perhaps to move, and we will look at seasonality. April is a good month, but there is a time we want to perhaps pause. Of course, if we break through that and continue, then we mentioned about 4,300, and it could go up. But at this time, there is the momentum going up on a weekly basis. MACD is flat, so just don't be too aggressive at this time. The other thing I want to look at is our Ichimoku, and this time what I wanted to look is on a daily basis, went from the low of December to the high of February, and wanted to look at that. So you can see nicely we broke above the our cloud. So that's one. I usually like to have a 2 confirmation. So we are right against, when we look at the Fibonacci from the low to high, you can see how we are at the 23.8. So that could be resistance, but again, temporary. And also we're looking at the ADX is actually the trend is getting weaker, although our DMI positive just crossed a negative. So it's a food for thought. This is, again, you can see there is nothing to say that we got to short this market. It just says you got to be a little cautious. There is a lot of momentum coming, as we will see from the other indicators. And that brings us to NASDAQ, which has been on fire. We see we have been embedded in NASDAQ. We've been hugging that Bollinger Band, so we are touching it again. But stochastic is embedded, so there's still strength. And as I mentioned, look at the charts of NVIDIA, Tesla, Meta, look at Microsoft, look at Apple, and you see it is also this AI connection too. So think about that. But the money, with the thought of what is happening with the interest rates and what is happening with the year that these stocks had last year, they basically just collaborated. On top of that, what is happening with the obviously there was some short squeeze, but also again with the rates pause of the thought of the pause of rates, obviously that's helping very much. And on a weekly basis, again, we are overbought, but this is our next target. You can see that the 100-week moving average, we're at 13,775. So we still got about 3% or so left. So okay. As far as looking at the Fibonacci, we're looking at the NASDAQ. And as you can see, this is again an interesting chart when we look at on a weekly basis from the low of 2020. You know, we had looking at the coronavirus to basically looking at the NASDAQ, the highs that we saw in end of 2021. The retracement, we see we are just breaking above the 38.2. So whether we would go hit that 50%, that could be around 13,900, or would we reverse? So again, this almost looks like a reverse head and shoulder, double bottom. So again, you can see the strengths higher higher lows, higher high. So obviously the trend has changed. So, but and also it's April and the March. So and Russell, as you see, Russell has been the weakest of all the indices, and basically we just broke above the 18-day moving average. The momentum is up. The also the MACD is crossing, and let me see. Sorry. Okay, sorry. Okay. As far as so the Russell, that's important. And when you look at the Dow, that's also had a strong week. And now again, we are overbought, although MACD is looking better. And just think about this 100-day moving average at 33,715. So we're getting close to that. So that could present a resistance. The CCI is overbought. On the other hand, the transportation just broke above the 100-day moving average. So that's a good sign. We are overbought, but the MACD just crossed. Now, the question is about VIX. I think last week I mentioned about watch for these long tails, the wicks it's called, and then here we've had indecision. But what happens is so the question is, we are getting close to the lower edge of Bollinger Band. We are getting embedded, but when I looked at, when you look at the futures market going 2 months, they are pricing 22. So they are saying that there's a good chance we will come back to 22. So although, we are getting to the lower part of the VIX, you can see there's a major support. So let's watch for that. So we could still go down, as you can see, we haven't touched the Bollinger Band, but it's something that we should pay attention, that there is a good chance. Again, the futures tell us that there is a good chance of bouncing of the VIX. And the VVIX, again, we went outside, came inside. We are right at 100-day moving average, although, and we are oversold. So let's see if that will be a little bounce for hedging. So the whole story is about, again, the yields, right? So we had this tremendous volatility, tremendous drop in the yields. Obviously, the catalyst was the banking situation, but they've been kind of playing around oversold, embedded. So this is oversold, but it could be considered embedded because we have not really had any chance of staying above the 20 that much. So basically, it tells us with Bollinger opening, it could actually even go lower, which is good for NASDAQ, obviously. And you can see the 10-year notes, they cross 18, cross the 100-day. We are above the 18, although momentum is going down and MACD is kissing and could be trying to go down. So basically, that's something we want to keep in mind. The same thing with the 30-year bond, similar story. And then when we talk about dollar, So the question is, if there's going to be a pause in increasing rates, that means we're end of the cycle. So that's why the dollar has been behaving and keeping the door open for euro to become stronger. And also we will look at the seasonality of dollar. So right now we are basically basing, we're embedded, then became oversold. We are oversold again, but it's there's quite a bit of resistance at when we look at 103 and 103 and 103.8, so the 118 day. So but this will give us a couple of plays that tells us what could help us to understand maybe gold and movement, and then also basically with the rates. So let's pay attention. And of course, euro, if you want to play that. And you can see euro, on the other hand, has been opposite of dollar. We are above the 18, above the 100. One thing is you can see the CCI, there's a little divergence. So is with the stochastic. So that could tell us there's a little weakness in the short term, but we might go just touch the 18 or the most is 100. But as long as the euro continues with the increase rates and we are pausing, then that will be positive for euro. Of course, there's this question of the how slow, that slowdown in euro is what is happening there, the European as an economy. One thing I have to mention, talking about euro, now last week when we had the European looking at the inflation numbers, I mean, Spain had a huge drop in Spanish inflation. I think that they're down to like 3.5%. They dropped. So there was a big drop in those, and pay attention to France. So bits and pieces of different economies in Europe, things are happening. So with that slowdown, euros again, interest rate hikes. So that's a food for thought. Now gold has had a nice run. Obviously, there was a flight to safety, and you see we stayed up almost 5 days. I mean, 3 days came in and then went and came in. So, but basically had a nice run. We're still above 18-day, 100-day, although we are overbought and MACD might be closing. We are that crucial $2,000 in gold. So this is not the time, I don't believe we will short gold. So with the pause in interest rate, that will help. But it's time to take a little bit of profit, in my opinion. But there's no time to short. Even the MACD is trying to kiss, it's still, you know, the trend is up, the momentum's still up. On a weekly basis, you can see the momentum is up. We are getting overbought. We did go outside the Bollinger Band, as you can see, and we came back in. The 18-week is just crossed 100 weeks. So in the long term, things are looking positive. So keep that in mind. As far as the squeeze, that's what I want to look at. We talked about the squeeze. This is a monthly chart of gold. And you can see that we've been in this long, that's 6, 9, 12, 15, 16-month squeeze on gold. So let's see when it fires. I mean, there's a lot of momentum, although the A and C waves are positive here. So this is, I would encourage you to follow the squeeze on the monthly, because that will be a good indication of what happens in months and even years to come. As far as silver has been actually stronger. We are embedded. We are above the 100-day and 18-day, and 18 is about to cross 100-day moving average. And the CCI is nicely embedded as well, in a sense, but the stochastics is doing well. So that was an interesting chart. And when you look at the weekly, we just broke above the 100-week moving average. The question is, we had done it just a few weeks ago, can we stay above that? So the momentum is pointing up, and MACD just crossed. So that's something, again, paying attention to see if there is obviously more strength coming, which next week will be a good indicator of that. As far as the copper, very flat, nothing. The question is, you know, China was pretty strong at the beginning of the week, a lot of stocks, but China is saying that they want to stimulate, they are going to work on growing faster, but the indicators are not as positive. So perhaps that's one of the reasons there is this pause in copper. And then Bitcoin, initially the catalyst was obviously with the banking system, with alternative investments in a way, but also from point of view of technical. You can see how the MACD cross, how we just had a nice support at 100-day moving average, went outside Bollinger Band, consequently we moved up. We did go outside the Bollinger Band, came back in. So that tells us, again, there's nothing in the sense that's saying that we could have short this market. Once we got here, it would have been a good time to take a little bit of profit, but it's been just flat despite a lot of negative news and regulations. But here it is, from Binance news to FTX and Silvergate, and yet it's behaving nicely, and it's taking Ethereum with him. And then last but not least is the crude oil. We talked about how we went outside Bollinger Band. That 68 area was a good time for the going long, or cover your shorts at least. And now the MACD has crossed. So the questions from technical point of view, there's a 100-day moving average about 77, 75. That's the Bollinger Band. And from fundamental point of view, we've had these nice up 2 days. Is, you know, the situation in Iraq with what is happening with the Kurdish government, the Kurdistan. You know, there's about 500,000 barrels of supply restrictions, and what is happening. Also Monday we have the OPEC thinking that they're going to keep their supplies and not going to increase their supply. So that's also from fundamental point, but also you can see from the technical point it's working. Interesting, again, these expected moves, everything was working out. And then of course I talked about the squeeze, and we will talk in the lesson of the week. This was the gamma squeeze, and look, I mean, we just went outside the expected move. The same thing with the NASDAQ or the QQQ, the same thing with the Russell. We had the same thing with the Dow, strong up to the day before. They respected the upper the expected move. But we go to the bonds, we did go below that, and then we bounced back. So we finished almost where we started. And then the dollar respected its expected move. And the same thing with the gold, we just pretty flat. And then silver was stronger, as you can see. We did go outside this expected move. And financials, actually, on Thursday, they did go outside, came back in, and we just parked right on this expected move. Obviously, there is more news as far as, again, things are calming down, although, you know, we had the Senate and housing as far as hearing with the head of the FDIC, for instance, and there's a lot of question about the regulators. But yeah, so that was the financial calming down, a nice run. And then energy was a big winner last week. So, all right, let's talk about the emerging markets. There's just a few ideas as far as what's going on in emerging markets. This is the Wednesday. You can see it was a been pretty positive week globally, from Canada to Euro area and to Hong Kong, and Argentina had a big bounce, and Egypt, and so those are, again, the risk, kind of a risk on. And so for year to date, developed markets are up 5.3%. As far as fee news, number one, it's interesting. I mean, emerging market had not performed as well, but year to date inflows to emerging market equities is 37.4 billion, which, if you analyze it, is 152 billion, which would be the largest ever if inflows continue at this pace. As a percentage of assets under management, which is 2.52%, that will be 10.3% annualized, and that will be the highest since 2010, which was 14.7%. One thing also is, there's elections coming up in Turkey, and it is going to be in May, which is Erdogan is actually behind, but he's doing anything because he's still in power. He's got control of a lot of things. In June of 2022, Turkey asked the United Nations, and they agreed to, instead of calling it Turkey, calling it Turkiye. Turkiye that's what the Turkish people, or people in Asia, I mean, I know, like all the neighbors, they don't call Turkey Turkey, they call it Turkiye. And it was more of a national movement. So you can see, again, being president, he's using all the stops to make sure he gets reelected. So if you watched, for instance, the Euro, as far as the for the European coming up in 2024, getting as was qualified for that European qualifications. Now they were playing against Croatia, and that's what all the announcers are calling this Turkiye. So in January 2023, the US State Department also agreed to adopt the requested change in its written communication. So these are the things that, again, all of a sudden, the Turkish Atatürk started, I think it was 1920s, and here we are about exactly 100 years later. They want to make sure everybody else pronounce their country's name the way they do. Another election in Bulgaria, there is crisis going on, and we will have parliamentary elections in April, and it is a mess. So there's people have apathy, and they just not gonna go ahead and turn out that much. So there it goes. A couple of things. Number one, we've talked about Thailand, I think about a year ago about this time, or a little before that. We've been talking about the tourism. That's one of the biggest revenue generations for Thailand. So thought maybe we should come back and visit it. And you can see Thailand tourism has much further to go. They've been recovering nicely, and you can see where they were. This is the 2022, 2021, and this is so far expected 2023. So basically, they still have moves to go. So this is what I want to pay attention. Again, we've had a change in when you look at Japan's economy, and we've talked about it as far as would US be the same way after, there was the bubble burst in Japan. They've been trying to create inflation. They've been fighting with the lowest rates and negative yields. And but with the new central bank, would that change? And that's a big question for this year, and I think the years to come. Because remember, we're looking from 1990, 91 till now. What has happened? They've been buying their ETFs. They've been really actually trying to create things. So why this is important? The importance is if they decided to actually stop lowering rates and increase the rates, what will happen when we look at the interest rate parity? The money actually could come back. They're the largest investors in our treasuries, in US treasuries. They have over $3 trillion in different fixed income markets around the globe. That money could find its way back home, and that means selling or, again, moving out of those bonds. So that is something that just got to be prepared, and obviously it will affect their currency as well. That's why you want to watch Japanese yen. Switching completely out, we've talked about a water theme. I think it was one of our investment themes, and we wanted to see in the different countries around the globe, especially in emerging markets, what is happening as far as the water quality and if there is any stress. And we can see that when we go to Gulf Coast countries, we see there's a huge, we call it acute stress. So from Qatar to Saudi to United Arab Emirates to Kuwait. So there's a big problem with these. And then, of course, Pakistan, and Tunisia, Oman, Egypt, Jordan, they have these problems. And then you come back to where we don't have a problem. You see more of a natural places: Iceland, Colombia, Peru, Brazil, Malaysia, Russia, with tons of lakes. So just a food for thought from the as far as where the fresh water is available. We just had Vietnam's GDP for the Q1, and it was actually, it grew only by 3.3%, which is sharply decelerated from the 5.9% in Q4. And one of the biggest reasons is, I've called Vietnam the China of China, or China of Asia, in a sense. It was the slowdown in the growth, and it's been the slowest in the past 12 years. Of course, the high inflation, and again, the global demand have put a stress on that. They are, because of short shipment of smartphones, it is, they are the largest export earner because of again, smartphone. It fell 15% year over year to 13 billion, and electronics shipment declined. So basically that's been, so you want to watch that. It's been hit. The government, although is targeting 6.5% growth, it is below the average of 8%. Despite all that, when we look at the valuation, when you look at the price to book, we are at the 30% discount to price to book. You can see that even when you look at the chart, we basically win a major support. So a food for thought, if you want to be a long-term player, Vietnam might be again present itself. I know we talked about in 2020, it had a really nice run for a year and a half. And then, of course, the inflation problem, the rate hike, the China's closing, all that, it created a contraction. But this might be a good time, again, take a look at it. Another interesting thing is, it's just completely different, going back to political, successions are very important in the Middle Eastern countries. And this caught my eye about Abu Dhabi ruler. What it has done, it has balanced the power, and with the two brothers, Sheikh Mansour, which you probably are familiar if you're a Manchester City fan, and Sheikh Tahnoun. And basically I thought it's interesting to see that, especially after what is happening in Saudi Arabia and Mohammed bin Salman in Saudi Arabia, what he's trying to do, he's building, he's really being very ambitious, aggressive. He's building this city in Mecca or the subsidy. It's a city of future. So would that happen? But the bottom line is it's the consistency, or as far as continuity in these countries, the clarity. So it was just interesting. This is more of again, a little reference point for you. Last but not least, I know, in Western countries, rice is not as big as, for instance, Asian countries and African countries, but you can see that actually the forecast for the rice is even higher than what it has been in the past, the 2019 to 2021. So it's a little chart on as far as on a weekly basis. I just want to show you where rough rice is, which you can trade it on the futures market. It's not very liquid, but just it is another alternative. But you can see how low it is in North America compared to Asia and Africa. So it's a huge market for it. All right, so let's talk about the lessons of the week. Number one, this is interesting. I've always encouraged, my clients and myself. I've always been a Berkshire Hathaway shareholder. I love listening to Charles Munger and Warren Buffett. Their annual shareholders meeting has been fantastic. And I've had some of my students, actually, they have won to be part of, like private luncheon with Warren Buffett. And they tell me, I've never been part of that, but they have, and they tell me stories. So it is fantastic. Even I think Charles Munger is like 98 years old, and Warren Buffett's not too far behind that as a junior. But this is how, since 2000, you can see how the Berkshire Hathaway really has its own index, and it's like really its own market has performed. Now, S&P is doing a little better than when on a rebound. So, but still, it is, again, if you have children, I would encourage buy at least one share, and you will receive. Now you don't get. I have all these annual reports, the booklets. I've kept it for many, many years. Now it's digital. I don't get it anymore, but it is really interesting to listen to the shareholders meeting. So talking about seasonality, I'm going to spend a little time because we did have a couple of classes on seasonality. So I want you to pay attention to that we are coming to the two strong months. We already had March, and then April is supposed to be. Now, we talked about this in the last year, and April was the beginning of, it was one of the worst months. And of course, the timing of it, right? It's the first month that's when the Fed started tightening. So that coincided with that. So, but on a normal situation, and this goes back to 1950, so you can see that April has been the second strongest after November. So November, April, and then December. So just keep this as a reference. So we are in a good position. And there's a couple of reasons. We talked about taxation and, IRA, and people get their refunds. They get, basically, they have to contribute to their retirement account. So there's a lot of liquidity. So a little tidbit, trivia. Since 1950, S&P 500 has gained 0.7% per calendar month on average. So every month, that if you average it out, if everything is equal. The largest monthly loss for S&P was, and I lived through it. I remember October 19th, it was 21.8%. And I think it was 22.7 for the Dow, the 508 points. And so that was October 1987. That was a monthly loss. And then the largest monthly gain was 16.3% in October of 1974. It's in October's theme. As far as seasonality, again, this is for the energy. And you can see from January 2000, again, the move in between April and May, there's a nice bias to the upside. And it could be also, again, the driving season. So basically that's food for thought. And as far as a weekday, you see the Tuesdays are the best days if you want to perhaps buy end of the day on Monday and sell end of the day on Wednesday. So just a food for thought. Now, changing again a little bit of our theme. What is happening with the markets? I mean, we've had a big move, and but you can see, you know, every week you can see what is the amount of the shorts in the S&P 500, the futures. You can see, for instance, now this is, they do it once a week. March 28, we were at 563,000 contracts, 844, 564,000. So this is relative where we have been. You see, where this is basically right before October, November, right in December. So there were a lot of shorts, and then they were all covered. And basically, we are now going back to the high again. So there has been quite a bit of shorts that they were being covered, of course, because of what is happening with the banking. Another thing is, like, I thought, let's visit some of the quarterly, because we just finished the quarter. So year to date, wanted to see what was the best performing. This is year to date. You see NASDAQ has been on fire, almost 21%. Orange Juice was up 30.8%. DAX, we had talked about that. If you recall, I think that was one of our themes, Germany fund. We thought that would be a good pick for our investment. So year to date, they're at 13, and euro is 12.8. We go to gold, was up 8.8, S&P about 7%. The biggest loser has been natural gas and heating oil, and then you see quite a bit of commodities, and crude oil is down 7%. You see silver is really catching up with gold. So, anyway, so that was just again, just letting you know as far as how the quarter did. And for the month of March, because we talked about March being positive, you see that this month, NASDAQ alone was up over 9%. S&P was almost 3%. The gold miners were up about 15%. So the technology was a big winner. And on top of that, the long stocks or the semiconductors, where this is a triple, I believe that we're up 22%. The SOX index was 7.6, and the biggest loser, you can see that it was the regional banks, 27%, and financials down 9%. When we look at year to date, as far as S&P 500, this is, again, I talked about the FANGs, or not, I don't know what we want to call them, MAMGs or MAMG. So because we have Apple, Amazon, Google, Meta, and Microsoft, and Tesla, and look at NVIDIA, 90%. So remember, the bigger the box, the bigger contributor to the S&P. So these are the biggest. You see the Apple of the world, Microsoft, NVIDIA, Google. Now you see why, for instance, NASDAQ, and then of course S&P 500 done well. You see there's quite a bit of red, so they didn't contribute as much. But Apple, in just last 3 months, has his market cap has moved $500 billion, about 500, the biggest in the history, just in 3 months. It's as big as what the size of market cap of Tesla. So if that contributed, so think about that, their market cap, $500 billion coming from Apple, you get 200 billion, 100 billion from all that's how the S&P has performed. So just want to share that with you. And when we look at NASDAQ 100, remember, these are market cap. Based on market cap, these are the largest. So Apple, Microsoft, Google, double Google, or Alphabet, Amazon. These are the performance of all these stocks. So look at the top 10. When you look at the top 10, look at their performances, and these are the largest contributor. Now you can understand why the markets have done what they have done. I want to change this, go look at the Dow Jones. Why the Dow Jones hasn't done as well is because they are price cap. So basically the largest one, most expensive, is United Healthcare, and United Healthcare is down 11%. It's a defensive sector, in a defensive sector. Goldman Sachs and financials, Home Depot, Microsoft, again, we can see it, Amgen, Caterpillar. So you see, this is the reason that Dow has not done as well as S&P or NASDAQ. And when we look at the sectors, that's why I put down risk appetite. So for just the past week, and then you look at the year to date, the biggest winners are technology, communication service, consumer cyclical, and these three, and then of course basic material being more cyclical in the sense, economic based. You see, these are aggressive. When we think about more of a discretionary in a sense, they all done well, and they did all well last week. On the other hand, all the defensive, when you think about healthcare, for instance, now energy has its own thing because they were such a big move last year. But look at the financials, healthcare, utilities, consumer defensive, you see now the money has actually been moving from these to these. Now, if there is any type of a aggressive hawkish Fed, then things could actually move again away. So just remember that. Then we look at the currencies. One thing I want to pay attention, you see, again, I talk about risk appetite. The best winners have been, besides, you see Bitcoin up about 72%. But when we look at the British pound against yen, you see the dollar against yen. So remember, yen is the safety currency. So the money goes there when there's a risk. So when money moves away from Japanese yen, then that's the risk appetite. So pay attention to these. So that's why you see they have performed well. So that's why I call that risk appetite. We did have seasonality. So I want to visit back for S&P and the first of the month, and look back, if you would have followed, and this is for 25 years, could have you had a successful trade? And this is the last 3 days, and 4 days, 5 days actually being positive. So you see that even considers the first day, in this case, April, could be positive. So there's this, again, end of the month bias to whatever it is, especially when it's quarterly. It's like a window dressing. So that's from the seasonality. When we look at as far as the patterns of the months, we just talked about March and April. We looked at since 1950. This is for the 25 years, and what are the best days in those 25 days. So you can see March and April being, again, the best month. When look at NASDAQ, the same thing. You see April and March being very positive. And again, Wednesday looks like the most bullish day. And then when we look at crude oil, on the other hand, is interesting that for the 10 years, April becomes positive, but March was negative. So just a thought again. One more thing I want to talk about. I talked about Russell. This goes back and looks at since 2008. it's interesting that the Russell 2000 is right now, the Russell 2000 stocks comprise 3% of the portfolios, which is half of what it was a decade ago. So in a multi-cap core manager, so you see there is this bias toward really low as far as allocation to the Russell 2000 and small caps. So this is where we were, and this is where we are now. So would we go back to the mean? Is this a permanent? Because again, you can see the mega caps have performed a big part of the markets. The last but not least, I want to just view the dollar. We talked about this, goes back to 52 years. And the dollar seasonality, I looked at the chart, but also seasonality wise, looks like April is a negative month. And so just food for thought, is that something telling us about combining seasonality? Look at the chart and the Fed. Would that mean we're going to have a weaker dollar? So, all right, so, short and sweet on the trade of the week. We got NFP coming up, but we got 3 big gaps not filled from previous week. So just have those food for thoughts. And we talked about, again, these are the 3 days before beginning of April. So these are the last 3 days of March. And these are the volume of the S&P. We call them volume, SP, spread up and down volume. I mean, this tells, these are the 3 days. You can see, again, these are not the times to go and look for the filling the gap and basically going negative, shorting the markets. So if you look at the internals and look at the markets, you could see there was a pause, for instance, here. But when you look at the volume, look at the strength here. So this is not the time thinking that maybe we will fill this gap. So although we did like a quarter, not even close to half. So that's another point from the trading. Also, if you were looking at, again, last week, I'm looking at March 28th. Again, we're going back 3 days. So, right. So the 3 days on the end of the third, well, on Tuesday, you see what happened was, this is on, I like to look at the 60 minutes. We just on actually Wednesday or Tuesday, I'm sorry, Tuesday, we broke above the Ichimoku cloud, and we were up above the trend and standard line. At the same time, the lagging line has already crossed the cloud. So that was another confirmation. And since then, we've been just above the cloud, a nice uptrend cloud. The lagging line has been nicely up. And then we also, standard line has provided a nice support. So basically the 60-minute gave us a good indication that if you're going to be long, let's say playing option, this is not a good time to short. At least if you're not going to be long, don't short this market. One more thing on the moving averages, again, it goes back to that Tuesday again. You see how the moving averages, there was a contraction, and then we call these bow tie. At this moment, they crossed, and how nicely, first of all, we've been above that 50 bar moving average, and how nicely the 21 bar moving average acted as your support all the time. And these are just the 60 minutes. So anyway, I hope that's helpful. Quickly toward the end, ETF of the week, the Rare Earth Strategic Metals, REMX. They were the winners big last week, 8.8%. We had the Piedmont Lithium and Standard Lithium. They were double-digit winners. And then the Israel iShares were down as far as up about 1.7%. Another one was the clean energy. The PBW was up 8.6%, and the banking index was down 1.7%. One thing, talked about these mega caps. There is this ETF, it's XLG, and that's it chooses the top 50 of the S&P 500. And we are right, nice channel, you can see right here. And again, it's a specific ETF. So rather than owning SPY, if you feel, we used to have like a FANG ETF, this is like more diverse, but you see Apple is 13% of it, Microsoft is almost 12, Amazon 5. So just up here between, this is 30, about 40% is in, really, Google counts as one, really. 6 companies, when you think about it, is almost 40% of this index. So, and then you have Tesla. But anyway, so this is just a food for thought. If you feel this is going to continue, XLG could be a good ETF to follow. Stock of the week, there's nothing really in the sense, it's a more of a follow-up. A few weeks ago, we talked about the seasonality of MKC, for instance, somewhere around here, I guess. It did go down, and then they had the earnings, and this is what happened. I think, it is a spice company in Baltimore. And so here's the move that they had this week. So it's just has its own mind. And you can see we just breaking above this. If we can continue, that could be a nice continuation of this trend line. So anyway, just to follow up on that, scan for this squeeze. I just thought about the Dow Jones this time. There's 3 showed up for the squeeze: United Healthcare, Nike, and Visa. And remember, the earnings season will start soon. So a food for thought in 2 weeks or so. They just ending, really. There's just not much really out there. I think Levi's maybe, and WD-40, Valco Energy. So basically, these are more of the volatile holdings. So a couple of them, again, Levi's and Conagra, the food side. These are the estimates for them, and Constellation Brands and RPM International. Anyway, all right. So thank you so much. I hope it was helpful. I hope it was something that you can take advantage and use it for this coming week and weeks to come. That in mind, I'm going to stop recording and open up for our Q&A. So let me